In today's video, you'll discover a true hidden gem that isn't known by many people, but that is still one of the largest Canadian companies at the moment. So you'll find a full stock analysis on the company Constellation Software with the ticker CSU. As always, after checking out what is their business model, so how are they able to generate their income, we'll make a quick fundamental analysis followed by price prediction with multiple valuation models to determine what is the true intrinsic value of this business. So without further ado, let's get to it right now. Founded in 1995, Constellation Software is an international provider of market-leading software and services to a number of industries with over 125,000 customers in over 100 countries and a solid track record of growth. CSU is widely recognized as a company that is able to purchase great software companies in different sectors to include them to their business model. However, to make any types of acquisitions, Constellation Software needs to have three important traits from the companies that they want to acquire. First, the company needs to have an outstanding manager, meaning that they are looking for small tech companies that have an excellent board of managers. After, the company needs to have consistent profitability, meaning that they are able to consistently make great money despite all the different economic cycles. And finally, the company that will be acquired will need to have above average growth compared to the other types of companies of the same field. And so it is why we find a great variety of different companies in their portfolio, such as Volaris, Aris, Jonas, Vela, Perseus, and Tropicus, that are all operating in different sectors such as real estate, passing by healthcare, utilities, and mining. It makes that one of the big specificities of Constellation Software is that they are making great software acquisition in important fields of our economy based on different important criteria. However, it is important to understand that CSU in every acquisitions and merging that they are doing are not taking the place of the current management board that the different companies have. So they are letting them have the freedom to keep operating their companies as greatly as they are currently doing. And so by completing over 500 transactions of small, medium, and large cap public and private companies since its inception on the market in 1995, we can see that this company is pretty much just like an investor from Shark Tank that is looking for the best entrepreneurs to make them rich. Over the past, this strategy has worked pretty well for CSU, where we can see that in their latest earnings report, their total quarterly revenue have been growing by over 21% year over year, up to $2.4 million. All of this despite an increase of about 22% in their operating costs driven by a certain increase in their total staff expenses. So it looks like this company is getting more and more profitable over the last couple of years and quarters. Plus, when we take a look at their balance sheet, we can note a great aspect where they've been able to increase their total assets while diminishing their total debt. This was mainly caused by the fact that they've been able to greatly increase their total revenue, which has had the impact to boost their retained earnings and at the same time to increase the total common share equity. And so all of these great financial results have had the impact to boost the value of this company that is up more than 40% since 1 year. This makes that Constellation Software is now worth slightly less than $100 billion and is now integrated to most of the big ETFs that are tracking the Canadian market. However, if you currently don't have thousands of dollars to invest in that company, it might be hard for you to individually pick this one because one share currently worth over $4,000. In that particular case, your best option might be to directly invest in it by using different ETFs that are tracking the overall Canadian market. Plus, according to the analyst of TipRank, we can see that CSU has still quite a lot of potential for growth for the future, where they pretty much all have a buy rating on it. But now that we know what this company is all about, let's make a quick fundamental analysis on it. First, when we take a look at the evolution of the value of the company, we can see that in 2023, it was worth about $60 billion and it is now worth over $92 billion. The thing, however, is that despite some great value growth over the last couple of years, we can see that their total earnings haven't followed, where we can see that even in 2023, this stock was trading at a super high price earnings ratio of about 86, and it is now trading at an extremely high price earnings ratio of about 102. However, we can see that their forward price earnings ratio, which is based on the analyst predictions for the growth of the earnings per share over the next couple of years, is still quite lower compared to their current price earnings ratio. But still, with their price to sales and their price to book ratio that are all still pretty high, we could understand that with these metrics, this company would currently be quite overvalued right now. Over the last 12 months, we can also see that in terms of their profitability, they've been able to achieve a profit margin of about 6% with an operating margin of about 15% and some pretty great return on equity for the investors during the same period of about 13%. For the same period, we can see that the company has been generating some revenue of just shy from $10 billion, but with some great progression over the last quarter, year over year, of about 20% of growth. However, the only thing is that we can see that in their latest earnings report, we've seen that their quarterly earnings growth have been slightly diminishing of about 7% compared to the same period in 2023. Compared to the current value of CSU, we can see that they don't necessarily have a lot of cash and a lot of debt, where their cash position is only of about $2 billion and their debt position of about $4.5 billion. But still, when we compare their total debt with the amount of equity that they have, we can see that the ratio is pretty high, with a ratio of about 143% of debt to equity. In terms of the volatility of the company, so how the company will fluctuate over time, which is represented as always with the beta on a 5 years period, we can see that this company will tend to fluctuate slightly less than the market during that period, with a beta of about 0.80, but still over the last 52 weeks, we can see that it has been gaining more value with some total return of over 40% compared to the S&P 500, so the overall market that has gained about 35% of return. And in terms of the dividend, we can see that the company is paying a super small dividend of only about 0.13%, but with a payout ratio of only 13%, it is showing that this business is using most of its retained earnings to reinvest it to make it grow as much as possible in the long term instead of paying dividends to their shareholders. Now, to determine what is the true intrinsic value of Constellation Software, as always, we'll be using different valuation models to help us with this task. First, we'll start with the Peter Lynch valuation model, where we'll add the future growth of the earnings per share with the dividend yield, and that will divide by the price to earnings ratio. And with these hypotheses, we can unfortunately find that with a pretty high price to earnings ratio of about 100 at the moment, and with some low dividend yield, the company's value would currently be quite overvalued right now. For our second model, which is our dividend discounted model, since our average growth rate is bigger than our weighted average cost of capital, we won't be able to use it. For our third model, which is our discounted cash flow model, where we will simply discount all the future free cash flow of the company to find its true value, we first need to find what is the cost of debt, the cost of equity, and the cost of debt and equity to find our weighted average cost of capital. And so with these results, we can find that at the moment, the company's intrinsic value would be of $4,191 per share, which would indicate that this company would be slightly overvalued compared to its current price. And finally, for our two last models, we'll be using the Graham's original value formula and the Graham's revised value formula. And unfortunately, with both of these models, we can find that the intrinsic value in both cases would be quite overvalued compared to its current price. As you've been able to see in this video, Constellation Software has a quite uncommon business model where they are basically acquiring a bunch of different software companies. Unfortunately, the different financial metrics and the different valuation models that I've used for this video seems to be showing that this stock would currently be quite overvalued right now. And personally, knowing the fact that one share is currently worth over $4,000 and that no stock split has been announced for the future, it makes that personally I feel that it is too much of a big commitment commitment to buy individually a stock and a share of this business. It means that as long as the company won't make any stock split that could also help and benefit them to create more volume on the company, well, I won't be directly investing in it. On my side, I will also say that the fact that the company is just buying other different businesses is not something that I am looking for in a company, because usually when I try to buy a business, I am looking for a company that has a competitive advantage compared to their competition. And at the moment, I feel like CSU is way too spread across different sectors of the economy. However, it is important to still understand that I hold this company directly from ETFs in which I invest, notably one such as XIU that is tracking the 60 largest companies in Canada. In any ways, on your side, if you're looking for other companies that are potentially undervalued in this crazy market, well, check out the video that's gonna be right over here, and I will see you soon. Peace!